So you want to go into a little spattering of some top stocks for the week?
Yeah, I love doing this because it's always so much fun just to go through the research notes and pull out stocks and charts that really look attractive to me. Because I hope, listeners, drop us a note in the comments or whatever. Let us know if you like the smattering, you like the way we do it, anything else that you'd like to see us change up. But I think it's a really good opportunity for us to share some of the things that I'm seeing in the research that people might want to pay more attention to. So I want to start by pulling up Minecast, which is a stock that Joe, you and I were talking about last week, right?
Yes, we were.
Yeah. And what did you end up deciding to do with Minecast?
I still have it. I saw that it had a 100 score, and I was like, well, I can't sell it now.
Yep. Yeah.
That seems like a poor promotion of our product if I sell it while it's got a high score. So yeah, I like the chart. It's had a bit of a breakout recently. You can see there it traded flat for quite a while, and it's above all of its averages right now. And so I think I'll hold on to it until it breaks down past what do we got there? Is that the 50-day, Todd?
The
The
green
green
line
line?
is, yeah, the green line rising is the 21-day moving average.
Oh, it
Which
is. Okay.
crossed over the 200. The 50-day is still below the 200, but it's curling up. Minecast, for listeners who aren't familiar with the story, the cloud security risk management service. So they kind of embargo, probably this is the way I think of them anyways. We've used them in different things that I've been involved with in the past. But it's kind of like an embargo of email. So, if something looks like spam, they'll embargo it. You have to okay it. So it kind of helps keep you less exposed to phishing attempts, which is a big thing, obviously, with cybersecurity. Revenue is fine. Certainly not blockbuster, 17% year over year in the most recent quarter to 133 million. They do make money, and they've been making money since 2019. They're expected to earn $1.14 this year, $1.22 next year, up 7%. This doesn't blow me away on those numbers. Don't blow me away. I typically like to focus on companies with 30% top and bottom line growth. But I love the chart setup. It's high scoring in our research. It looks pretty good. My assumption here, Joe, and we had a down day today. It's got a saucer. You can see that on the chart. It's got a nice big saucer there. My assumption is that it's gonna make a try for that $60, but it might not get there in a straight line, Joe. It may be one of those things where it pulls back towards that $48 previous peak in April, kind of finds its footing again, rallies again. So you may see that as being one of those stocks that's kind of just kind of moving back up towards those all-time highs. And I like it here. I would be a buyer of it below 50. It looks like we closed at $49.99 today. I'd take a little bit of it, maybe run my stop loss below the 200-day moving average, or if you want to get really tight, run it underneath the 21-day moving average, and then just see where it goes from there. So that's one name that I wanted to kick off with. The next name I'm pulling up here is in that energy space, Matador Resources. Just added this to the research this week, Joe, and I think it has a 105 score. Oil and gas exploration and production in Texas and Louisiana. I want to say the Eagle Ford area formation of shale. Profitable, pretty profitable. 55 cents in 2020, given how bad 2020 is, that's not bad. I expect to earn 278 in 2021, up 405%. And then in 2022, grow another 22% to $3.39. Top line is down year over year, but you'd still expect that. I have no problem with that. Right now, I'm looking at more of the profitability of it. My assumption is that production will increase and you'll start to see those revenue numbers get more to flat and to growth as the year progresses. So my approach on this one, Joe, would be, okay, if I can get this somewhere on another retest of the 21-day, so maybe down here around 29.50. So if that's down 3%, down 3%, down 5% day, something like that, maybe add that to the portfolio. This one kept getting away from me all week, Joe. I talked about it in our Discord, Endava PLC. It's in our best and worst ADR report. They're a UK-based company providing software engineering, cloud transformation, and test automation. All I know, Joe, is that this is exactly the kind of setup I like, and I missed it.
Yeah, that's a nice chart. I could not tell you what the hell they do because I feel like that's just about every SaaS company ever. So they are a generic SaaS company in my book.
Yeah,
But
look at
yeah,
this.
that's one heck of a chart, man.
Look at this volume. I mean, if you look at, for listeners who aren't watching us on on YouTube, the blue days are just up days are just dominant volume, and the
Yeah,
red days are, you know, most of them are below average. It's just a sea of blue since mid-April. And, I tried to grab it. What day was it? I tried to grab it this week, I guess, on Monday and Tuesday. Yeah, it was on that breakout day I like it, Joe, when they break out and then they pull back. And I got a little cute with my entry. And this is why I always do market. Here I am, I tried to put in a limit order and the thing ran away from me. And that was the day that I wanted to buy it, and it would have worked out 95 to 102, even though it's pulled back. My strategy for this one now is if I can get it back in a sub 100 area, again, get down 3 to 5% day, I'd want to take that one. Next one I want to pull up is Dropbox. We've talked about Dropbox before on the show. Joe, I think this is a long-term hold of yours.
this is a long-term holding of mine.
Yeah, very high scoring in our research, grew 12% year over year in the first quarter. Looks like we've got double-digit EPS growth expected both this year and next year. And you can see on MarketSmith, they actually have it enabled so they can see the different chart formations. The ones that I'm big fans of, the saucer, cup and handle, and W formations. And we can see we have a W formation right here. My goal with Dropbox would be either I want to buy it somewhere around this 27 area where it is now, or I want to wait until it breaks out into the pivot above 28.33. And then the day after, if it sinks back down to test that breakout point, that's when I would want to pick it up. Let's take a look at another one. I may be pronouncing this one incorrectly. iCore or iChore or I something.
iCore definitely sounds right. I hope
Yeah.
it's not iChore. That would be terrible.
That would be a terrible name. Or maybe it does the chores for you. But anyways, critical fluid delivery subsystems for the semiconductor business. Obviously, we talked about the chip shortage. A lot of the semiconductors I don't think make a lot of sense right now, but there are a few exceptions. And this is one of them. 20% year over year revenue growth in the first quarter to 264 million. Expected to earn $4.12 next year, which means we're trading at about less than 15 times forward earnings. And if I look at the 5-year P range is 5 to 28. Usually in my head, what I do is I say, okay, if things go well and this has got momentum, will they take it back up to the 28 times? Maybe not. But what I might say is I say rough back of the napkin math, let's say 20 times. So if I look at 20 times 2022, that's an $80 stock. We're currently at 56. So I'd be looking to take this on any down day. And then, so if we get down 3%, I mean, the chart formation is fine. It's in a channel right now, kind of in the middle of the channel. So that's what I'd be looking to do there. Residio Technologies, it's a Honeywell spinoff, I believe. Critical comfort and security solutions. So again, I think this is just basically kind of controlling the different, your environment in buildings and homes, et cetera.
Thermostats, security systems, stuff like that.
Yeah.
Yeah.
And it's residential, so it's not commercial. So you've got a lot of consumer discretionary money kicking around, unemployment's low, wages are climbing, we've got some heat, and people may be going out and, using these things that can control their climate a little bit better. You've got 20% revenue growth in the first quarter, 13% earnings growth in 21, 12% earnings growth in 22. And, you're again basing right out in this channel. Not much volume anywhere to speak of here. So I'd almost want to see this one, if it could break above the channel again and then come back in and retest. If it did that, then I would be interested in it. Two more, Joe. Tenneco, TEN, which we talked about in the Discord channel.
We did.
This could very well be the cheapest stock that I currently own in the portfolio based on 2022 numbers. Expected to earn $4.78, and the stock is trading at $15.68. So it's trading at like 3 point something times next year's earnings. And they own a whole bunch of different automotive OEM like parts brands and stuff like that. Like I think they own Monroe shocks and stuff. So, obviously, if people have, if people are driving the used cars again, because we're now going out to work and we're going on vacation or traveling.
And new cars are insanely expensive now.
Yeah, and so you might get some more repair orders from that side. And then on the OEM side, if you can boost production back up, if you get over this chip shortage and production boosts back up, maybe that could be a tailwind for it as well. And honestly, again, a stock that I already own, but if I didn't own it already, I'd just be looking for a down day, something like a 5 to 10% move lower where I could take it. I just pulled up the weekly chart just to see how much running room potentially this has. And you can see here, it's kind of into the resistance from December of 2019. But if it can clear here, this was a $30 stock exiting 2018. So take that for what you will. We already talked about NVIDIA, so I won't mention NVIDIA or pull up the chart again on that. And then the last one, I also own this one, Lovesac. Lovesac does the, furniture, comfortable bean bags, comfortable furniture, couches, that type of thing. And, they did a really good job growing throughout the pandemic through shipments and e-commerce, but they also have a big mall-based presence. And my feeling here is that as people go back out and they're shopping and they're going into stores, that's more opportunities for Lovesac to be able to convert them into paying customers. I think this chart right here with the breakout to $83, broke out above the 81 prior high in April. This has been a really good stock to buy somewhere on the 21-day to 50-day moving average. So
yeah, I was just going to say that down 3.5% move today looks like a nice little buying opportunity.
Yeah, I mean, I think anywhere between 79 and 83 is not a bad entry to give this stock a whirl. And yeah, so that I guess that's the last one for this week and in the smattering stocks to consider buying.